right, welcome to the closing beat, everybody. Happy Wednesday. How you doing out there? All is good. Hope you're having a good day. Thanks for watching, by the way. This is a quick stock market update show we call The Closing Beat. We're financial advisors here at Jazz Wealth. Hope you check us out at jazzwealth.com. We're a small but growing company, and we like to focus on teaching customers and just constantly being there instead of being the typical financial advisors where you don't really hear from them, right? They send you a nice card every now and then. We're always here. Every week we do a class for customers, and every day, of course, I come here to you guys to help teach you a little bit as well. We've got a lot to cover today. We're going to cover some interesting things, of course, along the way. But if you didn't notice, the stock market was higher again today. It was sort of a mixed bag overall. On the right-hand side of your screen, you can see the Dow was up 1/3 of a point. You got 1% on the S&P and almost 2% at one point, over 2% in the Nasdaq 100. So let's go over and take a look at the charts. You got the S&P 500. Hey, man, it's a good day. It's a good string of days right there. Salesforce helped today. It was all the big names, your Facebook, Amazons, and Microsofts, things like that. But Salesforce helped to drive the leadership today. We'll cover that as we go through it. The S&P is now up 9% year to date. Is that a bit of a blow off top? Anybody want to take a gamble there? Anyways, so that's the S&P. The excitement was over in the Nasdaq. The Nasdaq had one of the better days it's had in a while. Up, on the day just about, let's call it 2%. Also, blow off top, you got a series of days that are rallying with maybe the final day, having higher volume, being a wider range day. I know you're going to have a lot of people that expect the markets to start drifting lower or sideways from here based on what's happened from a technical perspective there. And add to that a lot of the action today was because of Facebook. Great day for Facebook, 8% higher on the day. Amazon had a good day as well, new 52-week highs looking good. Apple, the big name there, up 1.3% as they head into their split. And Microsoft breaking out. This is that breakout we've been talking about. It's kept hinting. Go back and watch the show from yesterday and the day before. Really just kind of watching it come to a potential breakout, then actually happening was pretty exciting there. And I want to point out, honorable mention, we happen to have patiently been holding this stock for a while now. It's done well, but over the last month or so, it's been kind of quiet. Netflix finally waking up there just after someone mentioned it yesterday as well, so that's cool. The stock up 11% on the day, got a number of different analyst quotes and upgrades there. Great day for them. Obviously, a great day. We own that one, so we're happy to see that move higher. Now, here's the interesting thing. Like I said, I got some good stuff for you today. The Nasdaq is now nearing the 40% higher year-to-date mark. So it's almost 40% higher. Ask yourself, is that normal? Does the Nasdaq normally go up 40%? Is that something that you could normally expect to see happen? Let's take a look. Going back to the year 2000 here, we're using the ETF to track this here because it was fast for us to do this. Here is how many times the Nasdaq has actually been up 40%. 2 times, where it's gained over 40% for the year. Now, we're in late August, so we're not even through the end of the year yet. So that made me question one more thing. We say, well, when did the Nasdaq gain the 40%? Did it gain it all throughout the year? Did it gain it all in December? It finally rallied at the end. How did this happen? And if you look back, we go to 2003 here. By this day in 2003, the Nasdaq was up 33.33%. If you go to this day in 2009, the Nasdaq was up 35.5%. We are currently up 37.9%. So wow, it's kind of playing out like exactly how you saw in these two scenarios. Very low amount of data points. No research study would be done based on these low number of inputs here, but there is a look at how the Nasdaq typically performs. The average performance is not 40% higher. So those of you that believe we're getting stretched or extended, you now have data and a reason to justify your beliefs overall there. Like I said, the S&P is up 9% year to date. And if we take a look over at the Dow, a more modest gain there, up 0.5% on the day, well, 1/3% really. After hours up a little bit more there. You know what weighed on the Dow today was the insurers. You got a hurricane coming. Yeah, I wish the best for you guys there. They're in the way of that, but you got a hurricane coming, so the insurers are always going to drag a little bit ahead of that. It's unknown damages and things like that. Travelers insurance was lower on the day. And then not related, but also in the insurance space, United Healthcare lost 1%. I like this pullback, by the way. I think there's nothing wrong with the way it's pulled back, and you could see technical traders also believe the same because it hit the 50-day moving average and started bouncing off the bottom of that. So I like it, right? Looking pretty good there as far as that, but that's what held back the Dow overall and caused it to have a gain on the day that is not quite as good as some of the other indices there. All right, let's do a little something. We're going to do a little something that you won't see anywhere else. I can promise you that. So here's what we've done. In the past, what I did is I actually shared with you Is it better to have a lower interest rate environment but have home prices be higher, or have home prices be lower and have higher interest rates? From a mortgage payment perspective, from an average hourly earnings perspective, we went over that in the past where we covered what's actually better. Does it make a difference, and why would it make a difference? So maybe something to check out. What I want to share with you here today is we want to look at how many hours do you have to work to put 20% down, because a lot of people are having to put more money down on homes to keep their mortgage payments lower. You could argue right now, actually one thing you could argue is that if you look at the mortgage payments relative to the price of a home, mortgage payments are actually at their lowest level since 2011. That's all because of lower interest rates. That's not the focus here today, but real estate, super, super hot right now. And we've highlighted this in our research site. If you want to take a look at that, you go over to jazzwealth.com/research. I talked about the housing markets here that we're doing really well. And we covered some stocks and all that great stuff. This is not meant to be a promotion for that. What I wanted to actually do today was talk about how many hours do you have to work to put 20% down relative to history, right? That's the kind of cool analysis we're going to do. So I've even given you the data here today so you can check this out yourself, but take a look. So you've got interest rates lower. In the dark black, the solid black, we're showing the number of hours needed in order for you to put 20% down on the U.S. median home price. We use the U.S. median home price from the National Association of Realtors to put that in there. And currently you would have to work 2,443 hours to make that happen, to put 20% down. Now that's not fair because we can't save 100% of our income to put 20% down on a home. So what we did is in red, up in the background there, and also focused on the y-axis on the right-hand side there, we said, what if you saved 20% of the dollars that you had? If you were able to sustain a 20% savings rate, how long would it take you to put 20% down on a house given the median median cost around the United States right now? 12,069 hours is what you'd have to work, which sounds like a lot, but that's basically 5 years. If you look down here at the bottom, take you about 5 years if you save 20% of your income. If you are an average hourly earner who is not a supervisory type position, we got that data from the BLS there, and here you can kind of see the history. We have reached a point where it's not, you don't have to work more than you ever have to afford a home. As you can tell over here, there were previous times back in 2019 where you had to work more hours. You also don't have to work more and save 20% of your income to be able to afford a house. So there's still an argument for affordability in there, but I thought that'd be a real fun way to take a look at the how many hours you got to work to put 20% down on a home, because money is not as loose as it used to be. Still very loose, but not as loose as it used to be. So something interesting there. I hope you found that interesting, and we're ready to move on. So what you have here is our sector breakdown. That's what I want to go to next. So if I go over to the sector breakdown, before I get to that, if you're looking at your 401k today, let me hit that real quick. In your 401k, if you happen to pull it up and go, oh my God, the market's had such a good day, let me see what happened, you're going to be really disappointed. Large cap growth and large cap index were the only mutual funds in your 401k that should have been higher on the day. Some of the specialty ones may have been higher. But other than that, your large cap value, mid and small cap value, small cap index, mid cap index, Russell 2000, things like that, all down on the day. And your small cap growth and mid cap growth all down on the day. Really, really interesting type day where only those tech growth stocks really led the way. So just wanted to point that out before I start jumping around. You can also kind of tell by looking at the sector breakdown here today. On the right-hand side of your screen, see how some are red and some are green? It's not a uniform green day. So when you look at the S&P and you go, yeah, that market's higher, looking good. Well, look off to the right. You see financials were down, healthcare was down, transports were down, utilities, energy, real estate, right? Transports are not a sector, but we put it in there to even everything out. So one of those days where, look, only communication services got all the attention because of Facebook, right? It was a good day for, and Disney, by the way. But communication services hitting new highs there. Facebook accounted for over half the gains. Half of this bar that you see right here were because of Facebook. You got Netflix in the mix as well. Of course, we're happy with that. I'll take a bounce on Netflix there. Alphabet also trading higher as well. If you add those all together, you have 90% of the gains driven by those three stocks today. Rather interesting there. Moving on to tech, you got new highs there as well. That's going to be, look, I mean, Salesforce. I mean, that's helpful. Salesforce had a great day. Like I said yesterday, we happen to own this one. We're very excited to see it included in the Dow. We're very excited to see it have such an amazing day, 25% gain on the day. But here's the interesting thing. Salesforce gains 26% today, right? Microsoft gains 2% on the day. Salesforce gained 10 times, on a percentage basis, 10 times more than Microsoft, but Microsoft had the same effect in terms of weighting on the performance of the tech sector today. Very interesting there, how big behemoth stocks can move around an index or a sector. All right, also Adobe I thought was a notable mention. Anything tech, software tech, anything cloud-based, that all just did so well today in that space. On the downside, you got energy rolling over a little bit more. 2% lower on the day. It's going to be because ExxonMobil, remember yesterday? They got booted out of the Dow Jones Industrial Average, so that sell-off continues there. And Chevron down a little bit as well. Also, they're having to close some of their pumping stations and some of their subsidiaries because of the hurricane and everything. So that was weaker. You had real estate. Real estate and utilities were weaker on the day today because of interest rates. Interest rates are ticking just a little bit higher there. Slight tick. If I go over to, let's say, bonds there. When bonds move lower, interest rates move higher. Bonds moved a little bit lower here today ahead of the Jackson Hole meeting, which is not really in Jackson Hole. It's going to be online, but where the Fed tomorrow is going to talk about how they're going to try to cap interest rates, but more importantly, they're going to talk about how their new benchmark for inflation, I promise you, this is what they're going to say. They're going to give up the idea of saying it needs to be 2%. They're going to start saying give or take 2%. I don't know what words they'll use or whatever, but the Fed's going to say, we can't seem to get 2% as we want, so close enough, right? They're going to say something like that. We'll have fun with that tomorrow, but that's coming up there tomorrow. So anything interest rate sensitive today was weak on the day, your real REITs and your utilities there. We go over to gold. The price of gold was up $40 today, so bouncing back here in a choppy little bit of a range, not necessarily something I think you can count on just yet, but if you're a gold bug, you like to see what happened today, you're very happy with that. And if you own gold mining stocks, you're also happy with that as well. The GDX, right off the 50-day moving average, looking good. All right, you got silver. Silver also did well, and it's much stronger than gold. So silver, clearly much stronger than gold, up 3% on the day, and overall much stronger as well. So that is your sector breakdown for the day. It was right down the middle. Look, if you didn't have tech and you didn't have communication services, you had just as many sectors higher as you did lower, right? So it's a little misleading there. If you're building your own portfolios, doing things like that, you're going to notice there's a little discrepancy. What's the discrepancy there? Well, tech led the way today. All right, new highs and new lows for the day. Let's take a look. Notable new highs. I wanted to point out ConAgra because you had 38 new highs on the day. ConAgra just slowly moving higher. Talked about this yesterday. It's the breakout. It's a consistent little breakout, but it's a slow moving stock, so no need to expect that to move any faster than snail's pace. Abbott Labs making new highs there as well. We pointed this one out a couple times. Sloppy breakout, but looking good there and continuing to move in the right direction. Illinois Toolworks hinting at the next little wave of highs. It did touch new 52-week highs, but wasn't able to close up there. That one very strong. They're doing great. Sales-wise overall, not too bad thanks to Harbor Freight. Lind, this is the gap up reversal we talked about 2 days ago. That getting some follow through today. Love to see that there. And Agilent breaking out here as well. I would argue the volume's not as exciting as you'd hope, but it's notable, right? So if I have to put it on a list and watch it, you maybe if you had to take a smaller position because you weren't as excited about it, I could understand that sort of thing. And that is the new highs, new lows list for the day. What we're going to cover now is the watch list. You guys like the watch list, right? You like when we do these things? Let's go over to that. On the watch list here, this is a little bit unique because if the markets pull back, what do you buy, right? It's tough to buy stocks right now, assuming that the markets may just even take a break. Where's the strength going to come from? So what we did is we looked in the S&P 500 and we looked for shallow pullbacks. So for example, I'll go over to Ameriprise real quick so you can see. We looked for shallow pullbacks, but not just any shallow pullback. We want shallow pullbacks in stocks that are currently outperforming their sector. So we didn't want the weaker ones. We want relative strength compared to its sector, like financials. So for example, when you look at Ameriprise or even Bank of America, you look at something like Bank of America, you think, it's financials kind of weak. Bank of America is up 7% so far year to date, while financials are only up 3%. So if you compare that to the, You compare that to the financials over here, also a shallow pullback, but we're picking on relative strength. That's the key here. You might look at Whole Logic. There it is. Whole Logic, also a shallow pullback. This one's just blowing doors off. Up 6%, healthcare is up 1%, and after today, healthcare is not even up 1%. So you've got relative strength. People are interested in this stock for some reason. It's doing better than the sector, but it's pulling back in the short term very calmly, not these amazing big gap downs and things like that. Disney, great day today for Disney, up almost 2% on the day. It's now up 12% year to date, whereas the communication services were up 8%. Now they're going to be more neck and neck after today, of course. So that's that one. You got American Express, don't need to cover that. That's going to be in the financials as well, up over 3%. Financials not even up 3% there. So that's what we're looking for. You see the shallow pullback. Halliburton in the energy space. You wouldn't think there'd be opportunity to find in the energy space, but here's a stock that's outperforming. It's up 8%. Energy sector is down 2% year to date, and it just shallow pullback, meaning nobody wants to sell it. They realize this stock is stronger compared to the sector, so I'm just bringing it to your attention there. LKQ Corp, here we go, consumer discretionary. So very shallow pullback, and it's already starting to get moving again. It's up 14% year to date, where consumer discretionary is up about 10%. So outperforming by a little bit there. And back to utilities real quick. Here is DTE Energy, just pulling back ever so slightly there. Utilities are basically flat. DTE is up 2% year to date. So the moral of today's story is we're looking for shallow pullbacks where if the markets pull back, you can then measure those and say, look, they still held up. And we know they're already stronger than the market. So when the markets start to bounce back, where's everybody going to go? They're not going to go pick on the weak stocks. They're going to go look for things that were already strong, and that gets you one day ahead of schedule. Hope you enjoyed that as well. All right, what else do we want to point out here? We want to go to stocks in the news. Yeah, that's what we're going to do. We're going to do the stocks in the news, man. Here we go, Salesforce.com. Did you hear about that stock? Did anybody catch that? Up 26% on the day. Getting added to the Dow, but also beat on earnings by 77 cents. Revenue's better than expected. And they raised guidance. So the triple whammy of good earnings announcements there, which, in addition to the Dow thing happening there, you get a 26% rally there. Looking sweet. Intuit did pull back a little bit, but it gapped so far higher today. Beat on earnings by 69 cents. Revenue's better than expected. It starts way up here. Got a little exhausted, pulled back, still had a really good day. No complaints there. Hewlett-Packard. It did give back almost everything. Still added 3% on the day. Volume huge today for Hewlett-Packard, as our president would say. Up 9 cents on the day. Revenue's better than expected, and they raised guidance. So another sort of triple whammy of the best earnings report that you can have. Not really an exciting stock, by the way. It's moving sideways. It's trying to get something started. I don't know if I'm in a hurry to run over there and start a new position. Dick's Sporting Goods, fresh breakout. Look at this. Got a series of highs here. Breaks out on 15% higher on the day overall. Beat by on earnings by $1.96, right? That's a big beat because they were only expecting them to make $1.25. They made $3.21. Revenue's better than expected. They see same-store sales rising by 20%. People out there shopping again. Remember, sporting goods. If you look at retail sales numbers, sporting goods was one of the weaker areas. Sports stopped, right? Now that sports are getting back into play and the parents have to sit in their cars while the kids play soccer, you got to buy the cleats. You got to go buy the stuff. Dick's Sporting Goods is seeing the benefits of that. All right, you got Nordstrom also. It was lower on the day, lost 5% on the day. Nordstrom missed by 12 cents. Revenues came in weaker than expected. You see how that happens? Right? You're doing better than expected, you get rewarded, you do weaker than expected, and you're already weak, you got a recipe for a stock that's going to move lower. After hours, I noticed that the GOP says they're going to propose a new, smaller stimulus bill. I don't know if that's helpful, but if you have questions, feel free to post those questions now. I will cover one more little thing, and then I'll take your questions if you'd like there. Abercrombie, Burlington, Coty, Dollar General, Dollar Tree, covered that yesterday, by the way, the stats on that. Tiffany, Dell, Gap, Hewlett-Packard, Marvell, Ulta Salon, which we covered that yesterday as well, VMware and Workday. Those all are due to report earnings tomorrow, most coming in the morning, the rest coming in the afternoon. Dividends from Nextera Energy, $1.40, Whirlpool, $1.20, Advanced Digital, 62 cents, Allstate, 54 cents, CBOE, 42 cents, Kraft Heinz, 40 cents, and a whole slew of changes coming to the indices out there. Whether it's the S&P and going to put some Tesla in there, I don't know. You've got Apple changes and, of course, the split. But you've got that's going to change the way the Dow performs. You've got 3 new stocks being added to the Dow. You've got changes in the S&P 400. You've got changes in the S&P 600. You've got changes everywhere. So if you are an index fund person, pay attention. You might want to pay attention there. All right, I'll take your questions here if we can try. If that doesn't work, then I'll go over here and take your questions. Is what?
Come back to it in a minute.
Okay, we'll come right back to it. I like that. There's Mr. Producer communicating there. I love it. So You know what? I didn't check today, just for fun. I don't know anything in terms of, I don't have any ownership or anything in the stock, but NEO, another 15% on the day. Yikes, right? That's impressive. Jay says he's increasing his cash pile for now, again, for possible tech stock corrections. So, yep, everybody has this belief that there's going to be a pullback around the elections. There's actually no data to prove that. Stock markets tend to move higher into and through elections, although there can be more volatility. But I sort of agree with you. You know what I mean? Like if we're running up into the election and then we have that conclusion of who wins or whatever happens, kind of makes you think that you at least get a little bit of a pullback, and then we head into maybe the Santa Claus rally sort of thing. You could paint that picture pretty easily, Jay. I like it. I like it. What do you think attribute to the Salesforce move? Harry, it's earnings, monster earnings, right? So I think the majority of today's pop was on earnings. The majority of yesterday was the response to the Dow inclusion there. So you got a combination of two massive, massive changes coming their way. Netflix, yeah, we talked about Netflix. Great day. Very happy with Netflix. Oh, you want to give it a shot? Mm-hmm. Give it a shot there. See what happens. NVIDIA earnings. Jay, what are you doing, man? We're playing with something we probably shouldn't be playing with here. We're trying to be a little bit more advanced than we probably should. But all right, no problem. I see gold continuing to be strong running into the election. Oh, do I see gold continuing to be strong? If you have, so gold higher today on the stimulus expectations. If that comes to fruition, you'd expect more weakness in the dollar. I don't know how you relate that to the elections, but more stimulus means weaker dollar, means higher gold. So if you want higher gold prices, you're sort of cheering on the idea of more stimulus, even if it's smaller. You know what I mean? Yep. Oh, yeah. But as far as the elections and what could happen there, that's a bit of a crapshoot. Given Biden is very big against tech capitalism, Also, you mentioned the 6 weeks before the election shows the either up or down trend in stocks historically. Oh, I didn't see a question there, but yeah. If a company's kicked out of the Dow, will it affect their fundamentals? No. How would that happen? The company itself is still going to, like ExxonMobil is still going to do its thing. It's going to perform to whatever degree it's performing, but it wouldn't affect the company's fundamentals, no. Oh boy, here we go. Look, hey, with the politics, when they touch your money, I get fired up. All the other stuff, I don't have time for that. Do the indices gap up or down when stocks are switched? Oh, I think what you're saying is, does the index gap up or down when the stock is switched? I don't have any great data on that, actually. Yesterday we covered how the how the stocks perform when being added or removed, and also when they get announced and when they get booted. So that was the closest I came to that. That's a fun one, though. Just on the day they're added, what kind of gap up or down do you have? The adjustments largely take place beforehand, as far as making changes to index funds, mutual funds, things like that. Yep. Any reason to be in a hurry and start I think you're asking on AT&T. You want to start a position on AT&T? No. Think about this. When you look at a stock, make it prove to you that it's worth your dollars, right? My favorite quote of all time is from a guy down here who runs a radio show. He says, he'll see people go into a grocery store and find a cantaloupe, right? And they just want a cantaloupe. It's $2. And they grab it and they like squeeze it and they're sniffing it and they're looking for any weaknesses. They'll spend 5 minutes looking for a perfect $2 cantaloupe. But when it comes to stock, we're like, yeah, I'll buy that. I'll buy that. You don't even look. So what I want you to do is take a look at something like AT&T and go, is it awake? And if it is it trending lower or trending higher? If it's trending higher and you want to buy it, you're just looking for an entry point. If it's trending lower and you want to do something, short it, whatever, you're looking for an entry point. But right now, AT&T is asleep. What that means is, can you tell me what direction is likely next? It's tough, right? You'd have to say down at this point, but right now we're moving sideways, so you have nothing to say it's going to pop with any amount of certainty. Whereas if it's in an uptrend, you have a reason to say, well, what's the chance that I buy it and it stops the uptrend at the very moment that I buy it and it goes down? It'll happen at some point, but it's not very likely. So take a look at these stocks. When they're sleeping, you wait for them to make the first move before you commit the limited dollars that you have to grow. You have funds like, or have funds like the Qs and the VU become cost prohibitive? No, I don't think so. I mean, just fractional shares, whatever it is. You can participate in anything. Google, Amazon, look at those stocks. Many say tech is justified given the online business booming. I believe it's getting into a bubble territory. Bubbles are tough to predict, but there are a lot of stocks that you could argue are way overvalued. Yeah, I mean, we could have a long discussion on that one, and I could probably end up on your side with most of them there. Yeah. Accelerated the move to tech. I believe that. Yep. I was watching a guy. I like this jazz artist. Brian Culbertson's his name. Shout out to Brian Culbertson. If he happens to watch for some random reason, wants to come hang out, you know what I mean? We could play music together. But I watched him do this whole show, and he produced it all himself. It wasn't anything fancy, but it was really cool how it was done. And he wouldn't have done that. He wouldn't have bought that equipment. He wouldn't have bought those mixers, that laptop, that computer, that camera, that webcam to do the show if it weren't for the virus. He'd be out there touring. So that's one tiny example, which I agree. We'll go one more here. Dustin, you think there will be rotation out of the overvalued tech sector anytime soon? By the way, how common is it for Nasdaq to be up 40% of the year, and how does performance look going forward? Showed that already. So that's in there. There's no reason Nasdaq can't be up 40% for the year. It's kind of rare, as you now know. But that's a tough one, right? Now, what we could do is say, okay, with that data, let's look going forward, what was the performance like? I did point out 2003 and 2009, what the performance was like earlier in the show. But yeah, I think the issue with saying that tech is overbought or is in any kind of a bubble is you don't have that rapid, if you were around in the 2000, early 2000, 1999, 2000, you don't have that runaway sort of feeling where any tech company and their mother was going public, like old Jazz, we're building our own software, we're going to go public. You don't have that. It's a very limited IPO market right now, even though I disagree with a lot of them. It's a very limited runaway in terms of the sector. Yes, it's maybe a little overheated, but bubble is a really tough one. Go back and look at things like NTAP, Broadcom back in 2000, just because I was there. I remember watching them. That's a runaway. Those are stocks that were moving hundreds of dollars in a day that were not your Teslas and things like that. They weren't even priced to that level. We're talking, they would go from 40 to 140 in one day. So a little different. I think it's a little different scenario there, but what do I know? I'm just gauging it by what's going on. Hey, wrap it up there. I do appreciate you guys hanging out with us here today. I hope you had a great time and learned some new stuff there. We tried to do some little things different today. Hope that helped. If I did help you, hit the subscribe button. I appreciate that. Or check us out at jazzwealth.com. And let us know if we can help with anything that has to do with your retirements, rollovers, IRAs, things like that. Check out what we do. I appreciate that, and have a great rest of your evening.